You know, when there's this time of high anxiety about whether we're getting a correction or not, you really need a super bull, and we've got one. His name is Michael Lee. He's been as bullish as they come for a long time on this program, and he's with us again this morning. All right, Mr. Lee, Super Bull. Everyone's looking for a pullback. Everybody is, but not you. Explain yourself.
Well, Stuart, when everyone's looking for a pullback, that's almost your guarantee that there isn't going to be one. It simply doesn't work that way. When I'm the lonely bull,
you're a brave guy,
island,
Michael. I'm interrupting to tell you that you are a brave guy.
Stuart, it's just not the way it works. So when I'm the lonely bull on the island, I get more and more confident. When I'm bullish and everyone else is bullish, that's when I tend to start to get nervous. And so I'd say right now, just by a default of cash on the sidelines, you've got $4.5 trillion in money markets. You've got over $700 billion of announced buybacks, not including the $60 billion whopper that Microsoft came out with the other day. You also have an improving economy and increasing liquidity. We are not getting a taper anytime soon, and I don't think a taper really is going to materially impact liquidity. I think the headlines will come across, but if you think about it, $10 billion a month over the course of a year is still going to leave us with a balance sheet of between $8 and $9 trillion. That's going to have 3 to 4% of interest and principal being reinvested, which is $200 to $300 billion worth of bond buying that's going to continue on until they let balance sheet run off and then start to raise rates. So tightening liquidity is a long way away. The economy is improving. We're not headed for a recession anytime soon. The speed of the recovery is most likely going to continue to slow. But look, we saw this kind of slow growth, heavy-handed Fed activity in the markets. The last time Joe Biden and Obama were in the White House, the stock markets did really well. I think that's what we're going to continue to see here is a lot of cash on the sideline, savings rates close to 10%. So look, okay. I don't see this slowing down anytime soon.
So, Michael Lee, Super Bull, you would buy any and all dips. Is that it?
Yeah, absolutely, Stuart. I think that's the way you want to look at it. That's, and if we have a massive dip, I will sell other assets and fixed income or take cash from otherwise that wouldn't be invested in equities and be buying this market. I also think earnings are too low. So look, I don't think the market's going to run away 20 or 30% in the next 3 or 4 months. I think we're going to continue to see this grind higher where we're up a couple percent here, give a percent back, up a couple percent here. Okay. But net, we end up much higher.
Okay, we hear you, Michael Lee. We've been listening to you all these years. Thanks for joining us. See you again soon.
Thanks,
the market has just opened. We're expecting a mixed picture. Right now, trading has begun. Right from the start, we got actually the Dow going up 40 points. That's not much, but we weren't really expecting that. I'm looking at the Dow 30, left-hand side of the screen, and you've got about a third to a half of all the Dow 30 stocks are in the green. How about that? 35 points up. The S&P is down a tiny fraction, and the NASDAQ, let's see where that is. I believe that's going to be lower. Let's have a look at the NASDAQ, please. Yeah, there you go. Down about a third of